take a look at the sectors. It really was the reason we got the 3,000. It was tech and consumer discretionary. We got a little help from healthcare. Of course, you heard about the Trump administration reportedly proposing to eliminate the rebates. That's helping healthcare. But consumer discretionary, one big reason we got the 3,000, and that is basically Amazon and Home Depot. We got tech. That's the main reason. And you know the 10 tech companies that really matter. I'll show them to you in a minute. Look what's lagging. Materials and industrials are rather flattish. And that part of the problem with that, of course, is Fastenal today. I love Fastenal. It's a small company, $19 billion market cap, but it's a canary in the coal mine. So they make fasteners. They make machinery equipment. They make tools overall. A bit of a miss. Revenues were light. That was the main concern with Fastenal, if you put that up. The important thing about Fastenal, they're in the multi-industry space. They basically supply equipment to other industrial companies. And that's what happens. All things around here at the NYSE, there's all sorts of Fastenal products on the wall. So they're a very important company overall, even though small market cap. You see down about 4%. But look at the impact on the other industrials you have. Granger, another company that kind of operates in the industrial supply space. Flattish here. Caterpillar flattish. Textron a little bit down. These are better than the open. But you see C.H. Robinson and J.B. Hunt. These are the shippers, the logistics companies. Again, weak today. We've highlighted the weakness in logistics and the transports as another sort of canary in the coal mine about slower global growth / trade concerns. Speaking of trade here, we've been trying to figure out where the trade talks are. The Washington Post had a story on this morning, just basically talking about the lack of progress on core issues. There was a reshuffling of the Chinese trade team. Not clear exactly what that means. No purchasing, no new purchases, big new purchases of U.S. farm goods, and no real date for the next round of talks. So we're sort of in a limbo on this. The market is continuing to believe something's going to happen, but we don't see any real progress right now. As for the road to 3,000, we broke it down yesterday. From 2,000 to 3,000. So that was 5 years ago when we hit 2,000. Since then, of course, 2,000 to 3,000, the S&P is up 50%. But what matters, what really pushes us forward is technology was up 113%. These are the biggest companies. These are the ones that matter and that move it. The consumer discretionary also really pushed it up, and that was largely Amazon and a little bit of Home Depot. My point is an astonishingly small number of companies are really moving the markets right now. Let me just show you some things that have moved here. For us to get the 2,000 to 3,000, the 50% move, what companies moved us there? Microsoft was almost 7%. The reason we got from 2,000 to 3,000, Microsoft was 7% of the gains. Amazon was 6%. Apple was about 4%. Facebook, 3%. J.P. Morgan, surprise there, that was about 2%. You put it all together, the top 10 companies in the S&P were 34% of the gain from 2,000 to 3,000. The other 490 were the other 66% of the reason that we went up. That's my point. You see, 10, 15 companies are the ones that matter. If they move, the whole market moves, and nothing else really is that important overall. So why? Why is these tech-oriented companies so important? Why are people doing anything to get hold of them? Because that's where the growth is. That's where the majority of the world growth is. The growth is very hard to find, and investors will pay anything at this point